If you watched my previous press review on the so-called Volcker rule, you'll be aware of new legislation being planned for banks in Europe who opt to choose the high-risk route when it comes to trading assets. Well, now it's been revealed banks in the EU have offloaded over $1 trillion of assets over the last couple of years. It's thought this is mainly because regulators are becoming more stringent when it comes to banks' balance sheets and the risks they pose if another financial crisis was to hit. New rules such as Basel III and a tougher leverage ratio have seen banks start to move away from risky investments in order to bolster their capital, a direct nod to regulators looking to tighten controls on risky banking operations. Christopher Wheeler, an analyst based in London, thinks the new rules are having an effect. The leverage ratio has since hit them square between the eyes, which has presented further challenges and requires more deleveraging, especially for universal banks. As far as capital ratios are concerned, banks in Denmark had the highest, standing at 17.2%. Meanwhile, Slovenia had the lowest with 8%. The UK's average was 11.7%. Today, the German Parliament confirmed Angela Merkel for a new term in office. Next year, it's likely there will be more friction between Germany and other EU members over the finer details of the proposed European Banking Union. However, as we move into 2014, the EBA will no longer conduct their annual stress test of banks, opting instead to hand the baton over to the ECB, which will assess banks' asset quality via a review called the Comprehensive Assessment. Come November 2014, the ECB is expected to take the role of the Eurozone's chief banking supervisor, and its president Mario Draghi has said he won't hesitate to fail lenders in an instant if he spots any sign of weakness. Well, EU banks are certainly under pressure before next year even begins, it seems. That's all from today's press review. Don't forget to check out all our other interviews and updates here on Dukascopy TV. But for now, goodbye.